I've talked about evaluating your business before, and I've often recommended using a profit and loss sheet to do that so you can actually visually see what's in front of you. So what I did is I made up a mock profit and loss sheet for just a miscellaneous company. Um, Sells on Amazon, eBay, basically, just to see how to give you an idea of what I'm talking about with these. With this company, basically, like I said, selling January through December. This is a full year here. We're selling Amazon, eBay, and a miscellaneous income. Amazon started at $8,000 a month. I just gradually increased it $500 a month all the way in, and in December I hit a big jump there because everybody hits a big jump in December for their sales. eBay started at 1,000, basically increased it up to $100 all the way up until we get to December, in which case I increased it a few $100s. The miscellaneous income could be anything. That could be you selling on Craigslist. It could be a residual income. It could be anything that that you generate income out of whatever. But I just basically put it as $500 a month, saying that you made an extra $6,000 a year doing something else also. Then we have our returns. Everybody gets them. I just plugged in some generic numbers there. Basically saying that we're going to get back 1% of our merchandise back, which it can vary. It could be higher, it could be lower. However, so in total sales, this business shows it has $163,975. Not too bad. Cost of sales, basically it's to be cost of goods actually. But let me change that real quick. There we go. Cost of goods. Um, what I did here is I just plugged in a generic figure. You can see up here. It takes the Amazon number, divides it by 3, so it's 33% of whatever we sold. So basically you bought it for 10, you sold it for 30 type of business model, and the cost going through here, whatever, is exactly a third of what it is. On eBay, I did the same thing. You can see up here, I just did a formula. Everything we sold on eBay, we sold for 5 times what we bought it for. I know it's not going to happen every single time, but just for generic purposes, that's what we did. And your miscellaneous income, $25, because I don't know what you're doing, but that gives us just puts a cost in there for us. So what we have here basically is $50,893 is for our cost of goods, gives us a 69% ROI for the year. For your gross sales, or your gross profit, that's $113,082, which is pretty good. Now down here, you have different things you could put in here, whatever, but your basic expenses are going to be salary expenses. I just put down we pay ourselves $1,500 a month because we feel like we're doing good, and that's just a small enough pull from the business, whatever, where you still have money to reinvest every month, because you have to have that extra up here. You still have to have that extra every month, and at the end, you got an extra chunk of money there you're investing into it also. Payroll expenses, most of us don't have it, but you can put in payroll expenses. Subscription services, that could be anything from buying lists, buying into a paid service, your subscription services like your Profit Bandit, your OA X-Ray, AMZ Genie, or whatever subscription you subscribe to, whatever. But I just basically put it down as we spent $2,400 a month or a year for that. Office supplies, again, paper, ink, stickers, labels, tape, boxes, whatever you have there. Shipping expenses, since we're selling on eBay also, I plugged in a shipping expense there. Obviously that'll vary up and down too. Advertising could be that you did one of the Amazon paid services where you can pay to advertise a product. Could be a website that you're running where you promote it on the side, whatever it is. But basically spend $300 a year on advertising. Travel, that's your mileage, your meals, however you want to classify that. On the travel, again, I just put down we're going to spend about $2,400 a year on it, and I just broke it down an average of $200 a month. Obviously, it goes up and down. Same thing with inventory loss. You lose something occasionally. I just plugged in $25 every couple months there across there. Rent, most of us have no rent because we work out of our house. Everything. Some people take a home office deduction. You can try that. Some people have a warehouse. Some people have a storage locker. You can put all that stuff in there. Your insurance, basically, you pay that once a year, so it's $1,500 in May. They the rest of the year I just put at zeros. Utilities, $65 a month. Could be more, could be less. Some people don't write off their utilities. Some people write off a portion of their PG&E plus a portion of their internet bill. Some people prorate it that way. Figure out a way there. But for $780, we got utilities. Taxes is every 3 months. You pay your quarterly taxes. Charitable contributions. I just put down here $300 in March because we cleaned up some stuff, gave it to Goodwill, and $600 in December for Toys for Tots because that's a great charity and my favorite. Amazon fees. Amazon fees, I just plug this in. It's the same thing. It's just a formula. You'll see up the top here, whatever. Amazon fees are basically a third of whatever our total sales were. eBay fees were 11% of whatever our total sales were. So across there, we actually gave Amazon almost $47,000 to be able to sell on their website, which works out, for both of us. eBay, same thing, couple $1,000s in eBay fees, and then your miscellaneous expenses. This was actually just a line left on there, whatever, from the generic P&L report I pulled up, and I just didn't take it off. You're gonna have miscellaneous expenses anyway. This could be it. It could be twice this, 10 times that. It doesn't matter. But you're gonna have some unclassified expenses that you don't have. Now, basically, we come down here and we look, and this mock business shows a profit each month. Obviously it fluctuates here, and going up and down. It looks like 542 out of the middle of a couple months makes a big difference. Even though you have an increased sales, your expenses aren't always the same every month. So you come all the way across here and you can see that this business actually profited about $26,000 in 2015. And basically what these reports do is they just give you an idea of what you need to adjust, what you need to change. Obviously, this one, you don't have anything to compare it to. If you have multiple years, you can go through and look at their 2014 compared to 2015. You can see what the differences are, what months were different. You'll actually start to see trends that way. You can also look in and start to anticipate that you'll say, okay, I know this $1,500 insurance payment's coming up in May. I won't pay myself as much in May. Or you can pay yourself more in a different month because you know that in December you make the most money, so you pay yourself more in December. Give yourself a Christmas bonus. Basically, the P&Ls, when you pull them up like this, they give you trends. And these trends will help you plan better. That way you can anticipate, the season. What months, you're looking forward to. What months your sales go up or down. It gives you a lot of information to take in. But without this little snapshot on one piece of paper, you have to look up everything. We can all go in our GoDaddy account or go into our Amazon and look at our year-to-date total sales and see those, or things like that. We can always go here or there to find all this information, but to have it all in one spot right in front of you where you can go through and actually see everything that goes on and know what comes up, what's not going to come up. You can see trends in sales, like I said, trends in expenses even. This also doesn't take into any of the nuances like, cash versus accrual accounting. It doesn't take into account any beginning or ending inventory. This is one of those things where it just, as an example, we just started with 0 and we sold through 100% of our inventory. We have nothing at the end. All those things have to be added in to get more and more accurate with it. And of course, the more accurate with it, the more indispensable these reports become. And once you also start doing it, it's not so hard to keep up. But also, when you see down here that you have $26,000 left over at the end of the year, you also know that's a chunk of money that you're going to have to give Uncle Sam. Government's going to take their taxes on it. You could have paid yourself a little bit more through the year. Probably should have paid a little bit more in quarterly taxes, things like that. Or you can also look at that as I did not have enough expenses. I need to travel more for business purposes, of course, for taxes. Maybe bigger charitable contributions, things like that. It gives you a way to plan it. And if you cut this off at 6 months, you can also see it at 6 months. You can kind of evaluate where your year is. You can reevaluate your year at 10 months too to see if you need to start making adjustments. Maybe in November, December, you pay yourself a lot more, or you make this last, quarterly tax payment a lot larger. A lot of ways to use this report. I do suggest that you do it. Do it at least once. That way you can get a snapshot of where your business is at as far as financially. This will also help you get your cash flow under control. Because I know there's a lot of businesses out there that they buy something, they sell something, they have money left over, they're good. And that's the extent of their accounting. Every month they spend more, they spend some money, they collect some money, they have money left over, they must be doing great. These are very important. You got to be able to understand how to evaluate your business, and how to plan your business. All right. I really hope that helps everybody, and we'll see you on the next video.